Good morning, friends. I'm here to just record my trading plan for today. That is July 24th, 2024, and I will upload this on YouTube. So maybe some people will get a benefit from this. So I will explain my concept on my trading plan. I will make a plan and I will execute the plan. That's what I do in my trading. So two things that I look for I check is one is the market structure, what structure the market is on, whether market is making a bullish structure or bearish structure or higher highs, higher lows or lower highs, lower lows, what the market is telling us with its chart pattern. So the first thing is the market structure, and the second thing I look for is the liquidity zones. Where the liquidity is, market always goes between liquidity. That's what I believe, and so many people believe. So market will go up and down from liquidity zones to liquidity. Sometimes it will take the liquidity and come back and to the zone, and sometimes the market will break through the liquidity, then go up or go down to its direction. So I'll be looking for this if the market is going through the liquidity or it is coming back to the zone or where the liquidity is. That's what I usually look for, and I trade according to these things. This is basically ITC concepts. First thing every morning, first thing I do is taking a uh, looking for the market structure, what market tells me. So today I use 1 hour for this analysis. 1 hour 15 minutes or 5 minutes are my time frame. For analyzing I use 1 hour and 15 minutes, and for taking trades I use usually 50 minutes and 5 minutes. That's what I do. I changed it to 1 hour, and I am looking for first we are looking for the market structure. Okay, for that I just taking the path tool and I'm marking a low here and avoiding all these market movements. I'm coming to this point and I mark this as a high, and coming back to a low, I mark this as a low. So this is a higher low. This is a low, and this low is above this low. So this is a higher low. Second low is a higher low. So I'm marking this as a higher low. Then I'm going to this point and marking this as a high, and this is a higher high. That is this second high is above the first high, so this is a higher high. Then I am coming to this point only because I'm avoiding all these unwanted fluctuation in the market. So I'm marking this as a low. This is also a higher low. Then I mark this as the next high, and this is a higher high. Then I'm marking this as a low. So what market tells me is market is in an uptrend in 1 hour. In 1 hour, the market is in an uptrend because the low, high, higher low, higher high, higher low, higher high, higher low. So the market is an uptrend, I believe. And if the market comes down, this is a low. Now this is a low, but maybe market may come here, so the new low will be here, and we can assume the market structure is changed, market behavior is changed because this low is broke, and the market, if the market comes here, we can assume the market structure is broken, and we can look for we can assume the market changed to bearish trend. So that I will explain later. And now the market is in an upper in a bullish trend because the market makes higher high, higher low, higher high, higher low pattern. So that is the first thing to do. Then I will check for the liquidity zones. What is liquidity zones? The liquidity zones is where people usually tend to make orders. That is, this is a support zone, right? This is a support zone. Market took support so many times here. Yesterday also market came here, and it took a retraced here. So what will do usually people think? market, this is a support zone, and market will come here, and I will take a trade from here. Then where will they place their stop loss? They will place their stop loss here, here. So this is liquidity. They will make so many orders here, and market tends to take that liquidity. That's the only concept we need to know. So many people take trade here and making their stop loss here, somewhere here they will make their stop loss. So market will tend to come here and take all liquidity. Definitely that will take liquidity. Then we should check for the direction of the market, whether the market will go reverse or it will continue its journey after taking the liquidity. That is another matter we should check whether in the live market. So now we consume market will come here, either here or in an upper zone. That is this is a zone where people might think this is a resistance and it is an all-time high for Nifty. So people, what people will do, they will take a selling position here when market reaches here and place their stop loss here. But actually what happens is market will take all this liquidity, all this stop loss. Every stop loss will be hit and market will reverse. Usually we see in our early trading life that wherever we place the stop loss, the market will take the stop loss. This is why that happens. We will put a stop loss order here. If the market comes here, we will exit from this trade, and just after exiting the trade, market will come here and it will go down like this. So we should mark the liquidity here. So I marked two liquidity zones, that is the support zone and a resistance zone. For this resistance zones, usually it is called as a buy side. So I marked it as a buy side, and the support zone is called as sell side, and I am marking it as a sell side. Okay, in 1 hour the liquidity zones are here, and I mark the liquidity zones. Okay, so the analyzing on 1 hour is over, and we will shift to 15 minutes. So we will check for the market structure in 15 minutes. So here also we are taking a low, then a high, then a low, then a high, then a low, then a high, then a low. Here you should check, maybe the market came down from this point here, but it closed above that point. So the low is a higher low. The market didn't closed below this point. Only if the market closes below this point, we can tell the market structure behavior is changed. But it is not closed below this thing, and it bounced back from here. Look, here you can see this is the point, and what happened is market just took the liquidity below this point. So many people took trade from here thinking market will go up. That was correct, but what they placed their stop loss here, and the markets just took this stop losses and bounced back to the zone. So this is not a lower low, this is only a higher low. This is a higher low because the market closed above the previous low. So from here it goes like this, then this, and this, and this. And now what here we can see is from this the market just went down and closed below this lower low, the higher low. Then now it made a new lower low, a lower high, then new low, a new high, lower high. So in 15 minutes what happens is the market changed its behavior by breaking and closing below this low. So we can assume in 15 minutes the market is in a downtrend until the market moves above this point. above this high and close with a displacement candle, we can tell the market is in downtrend or making lower high, lower lows. So we should check for the action in the market, in the live market, whether it goes up or down. So here is my plan. I know my explanation or my introduction is not that clear, but I'm just making this thing for, if anybody have any doubts, just comment so I can clear, or in my further videos it will be more clear. I'm just telling, I'm very a newbie to this recording and all, so just explaining my thoughts. So now I am uh, making my plan for today. What to do when what happens? That is the question. So for the higher high, higher low formation, I am using an indicator called higher high, lower low live. So it will be making the highs, the lows. We don't mark it manually; it will automatically come. So today's my plan is my assumption is market will come to either to this point, to this zone to take this liquidity, or comes to this point to take this liquidity, or it will oscillate between these 2 points, that it will come to this point, next to come this point, then make some moves. That is what I assume. So today my plan, primarily I am looking for bearish opportunities, because market in 15 minutes market is in a lower trend, in a bearish trend. So I'm looking for a bearish opportunity until the market, if the market breaks this point and make a new high, I will change my mind and I will look for bullish opportunities. So if the market starts from here, I will take my bearish trade from there to this point. I will take my bearish trade, because the market is in bearish trend in 15 minutes and here is liquidity. It will come to, I believe it come to here to take the liquidity. So I will take a trade from here to here and putting my stop loss above this thing. I will putting my stop loss, sorry, this is my trade, first trade. This will be the trade. If the market starts here, this will be my first trade. I will exit from the trade if the market breaks through this thing and sustain here. I will exit my trade, otherwise I will keep my target here. So that's it. For the bearish trend, this is my trade. Then if the market breaks through this and sustain above these highs, I will look for a bullish trade. The when will I enter the trade? The market should go up, then it should give a retracement. It should give a retracement, and on this retracement I will take this trade to this point, this liquidity zone. I will take a trade, then my trade will be like this, and my stop loss will be below this thing. Primarily I look for the, I only know the market structure, the present market structure. If the market makes new low, my stop loss will be below that low, but now my stop loss is in this thing. So this is my second trade, that is uh, a bullish trade. I will take a bullish trade if the market cuts through this high and retrace back to this point, and I will take a target here. So, and in what criteria I choose this point as the retracement, and where how I know where the retracement ends? That is a question. If the market goes up and it comes down, it may come here, it may come here, anywhere it can come. But how I know it will come here? That my assumption is, I will draw a fib retracement from the lowest point and to the highest point, just like this, and I will I will take a trade below zero point 0.5 or 0.6 or 0.7, or I will call this as a golden zone. Below zero point 0.5 I will take a trade if there is a gap. There is a gap called that I will explain in next videos. There is so many gaps called fair value gap, inversion fair value gap, then some order blocks, then a market breaks. There are so many gaps in the market. So if the market comes to this level and if there is a gap here, maybe in 1 hour, maybe in 15 minutes or 5 minutes, I will take a trade. That is my plan. These are two plans I have right now. And if market goes up and make a new high and a new high above this liquidity zone and sustain here, I will make another plan to take a bullish trade. And if the markets go down below this point and sustain here, I will make a plan to make a bearish trade. We'll see what happens. I don't know what happens in the market, but I definitely know what I will do in the market. That's the only thing I know. So I made my plan and I will execute my plan like this only. There will be no trade, definitely no trade. Uh, if the market didn't move like what I said, I will not take any trade, and I will wait for a pattern, or uh, wait for my plan to be formed. Okay, and then we'll see after the market. Thank you.